Welcome to our technical analysis session. My name is Sihlengema from QuickTrade. Please indicate if you can hear me. I see you have a couple of guys that have joined us already. Guys, please send me a message to indicate that you can hear me. Thank you. Okay. Thank you so much. Could you please help me with your surname? How do you pronounce it? Is it Ing? Is it Inge? Is it Ing? How do you pronounce it? So sorry about that. Can hear me. Is that Inge or Ing or Ing? Inge. Okay. Let's stick with Inge. Okay. Sorry about that. Edith, I hope this is the same Edith that I've had a chat with over the past couple of days down from Cape Town. And we have Zain and we have Kialebucha and Khozo. Guys, is there any one of you who's new to technical analysis, who doesn't know a lot about technical analysis? If you are one of those guys that are new, please let me know. I just want to understand at which level I must actually come in here. Guys, please send me a message. If you are new, please send me a message. If you are new to our technical analysis. Okay, let me see. We have two people. Edith, okay. New thanks. Okay, I'm totally new. My first class is Zain Sheikh Omar. Okay, guys. Thank you very much. Okay, let me see. I think we're getting more and more people joining us. Okay. Oh, okay, guys. This is my screen. On my screen there, I have the Euro US dollar. I want to try and show you the way that I use to determine maybe the direction for the new month, and also just to check how the stock or the currency pair has done over the past couple of months. We'll be looking at that today, but before I do that, for those that are new, I just want to show them the simple technique of figuring out whether the market is moving sideways, up, or down. I just want to show them how that is done so that they can understand how to do this on their own. The stuff that I'm going to show them, or the strategy I'm going to show them, is not. It's not 100% perfect. You have to understand your support and resistance. What I ask you guys to go and do after this session is to go and understand, is to go and do some research on support and resistance. Kelebukha is not getting a video feed. Okay, Kelebukha, what sort of device are you using? Are you using a mobile device or you're using a desktop or laptop? Because I mean, if you're using a mobile device, you won't be able to get the video feed. You can only hear my voice. Is the phone you're using or a laptop? Because I mean, desktop and the laptop, yes, you will be able to see the video. Oh, whoa, guys, I'm sorry. Oh, you're using a mobile device. Zane, if you're using a mobile device, I'm sorry, big guy, you won't be able to see what I'm demonstrating on my end. Only people that are using their desktops or laptops will be able to see what I'm showing on my screen. If it's possible for you to switch to your laptop or to your desktop, please do so before we waste any more time. If you have access to those guys, please indicate to me if you're going to be switching so that we can maybe cover a couple of things and not really move very fast. Are you guys able to switch on to switch over to your laptops or desktops? Please, Galebucha, are you able to? Okay, Zain will try to switch over to the laptop or desktop. She's saying that I must carry on. Okay, Zain, thank you so much. I don't know about Galebucha. She hasn't actually indicated. Won't have access to. Okay, next 30 minutes or so. That's my thing. Won't have access to that for the next 30 minutes or so. Oh, okay. My apologies there, Galibucha. Don't know how we're going to have that one sorted out. But I mean, in the next 30 minutes, I'll still be there, you know. We're going to end our session at 1 or just after 1. So we're still going to be around. Okay, guys, let's let's move on. Okay. For those that are new, guys, let me quickly go through the stuff that you need to look at if you're new. I'll use the US dollar or the euro against the US dollar. That's what I'm going to use. Okay. Let's do this. Maybe this is going to help us uh, in May. Okay. Okay. The currency pair, as I've just told you, is the euro against the US dollar. The base currency is the euro, and the code currency is the US dollar. The base is on your left, and the code currency is on your left. We have different chart types in our trading platform. If you click there at the top, yeah, we have line charts, we have bar chart, we have candlesticks, we have dots, we have dotted line, histogram, and area. Let me see this dotted line. Okay. Okay, I think maybe today we are going to use the dotted line also. Okay, let's start with the line chart. The line chart looks like this. The line chart is very simple. It only shows you the opening and the closing prices. It doesn't show you the highs and the lows of the day. But I like it because I mean it makes it very easy for those that are actually starting out. But I mean they're not. I mean line charts are not the best way to trade if you're only going to look at them on their own without using other other chart types. So the line chart, it's very nice going up and down. Yeah, that's how you use it. If it's going like this, you know that it's dropping. The next one that you're gonna use is candlesticks. Candlesticks, they show you this shaded part here on this chart on this. Okay, let me show you here. This one, the one that I've just highlighted, the shaded part is called the body, and below the body there you have your below the body there you have your tails. At the top also you have your tail. This tail here below the body shows you the low for the day, how far the price went down, and the one above shows you the high for the day. So that's how you read it. The bottom part of the body here is where this candle opened, and the top part is where it closed. And another thing, if you put your cursor exactly on the body of the chart, you see the percentage change. The percentage change is 4.5%. It's positive. You can see the guys made money in this month. And here, if you put your cursor on it, it's red, and the market there was down 1.97%. That was the negative percentage change there. So that's the candles, and that's how you use them. Now let's quickly go back to how you try and analyze your market. When your market is okay, we have this other line that I've got here. I'll try and make this line. Okay, let me remove it. I'll add this line. This line is called the simple moving average. We use that line to determine the direction of the market. I know that when the market is making higher highs and higher lows, it means that that market is actually rising. And when it's making lower lows and lower highs, it means that that market is actually declining. I know. But I mean, for those that are still new in trading, that haven't been trading for a very long time, I think it makes sense for them to make use of this indicator or tool that I will introduce you guys to now. Oh, okay. Don't worry about that for now. About what period? The period that I'm currently looking at is the monthly time frame. I know that some of you don't have the monthly time frame. Maybe let me show you how to get one on your on your trading platform. You go there where it says time. You click on there, and you come down to edit. You click on edit. Once you are on edit, you get these dotted boxes with a plus sign in them. You click on those and it gives you a period. The default is 1 minute or a minute, and the value below is 1. So you go to month, you're looking for a month, and the value you keep it on 1. Value is you period, you go here, you click on month, value leave it on 1, and you go apply. So you have your monthly chart. If you go back here now, you should be able to pick your monthly chart. It's one capital M, and one small letter M is for 1 minute. If you put your cursor on it, it says value period 1 minute, period minute value 1. If you go to this one, the monthly, it says value 1 period month. So you need to put your cursor on it to understand exactly what time frame it is, so that you don't get yourself confused. Okay, I think you guys understand that one. If anyone doesn't understand, please let me know so that I can go back and explain that. Okay, now I'm going to add that simple moving average. We use the simple moving average to pick the direction of the market, to understand whether the market is rising or declining. If the market is declining, you're going to see these candles showing up above your moving average. Okay, let me overlay the moving average for the ease of understanding there. Indicators, add indicator, SMA. Okay, go there, period, make it 10. That's your period, the simple moving average period. Let me make this one a little bit thicker. If you want to make it thicker, you go to your line properties, but there's no need for you guys to make it thicker. Okay, the blue line that I have here is your 10 simple moving average. Every time, okay, these are monthly candles. These candles, they make up the whole month. They start from the beginning of the month until the end of the month. Before the month is over, that bar hasn't finished forming. It's still busy forming. So if you see the price closing below your moving average there, or your red line, it means that that market is declining or is likely to decline over the next couple of months. And if you see it maybe going above, that could be an early indication or an early warning to you that that market is about to take off, is about to rise. But I mean, it depends on a number of things. We have support, resistance. Support and resistance is what I asked you guys to go and look at after this session, because I need you to understand that going forward, so that you can actually do well in your trading and become profitable. It's one of the main things that you look at if you want to try and make money in the market. Okay, guys, please easy with the questions. Don't ask me questions for now. Let me show you what I have on the screen for you so that you understand better. Maybe later towards the end of the session, or when I ask you guys to ask questions, you may actually come in and start asking those questions. Just write them down if you have them, so that you don't you don't miss me, or you don't get left behind. Okay, any close above your moving average, this red line, it means that that market is likely to move higher. So you must position yourself for long positions. So like here, this was back in 2017, April. The market closed above the moving average end of April, and the price started moving up. And this month, end of okay, last month, end of April, we had the market close below the 10-day simple moving average. The only way to see that is to put your price, or sorry, is to put your cursor on the candle. Once you put the cursor on the candle, it's going to show you the close. The close here is 1.19893, and the simple moving average is 1.2. I can't see that. 1.20066. So you see the close is below and the close is below the simple moving average. So that means that we closed below our simple moving average, which means that we are likely to have the euro weakening against the US dollar going forward, according to this simple technique that we use to decide whether the market is going up or down. We are likely to see this market, maybe the euro weakening against the US dollar going forward. Okay, now we understand this part now, that when the price or the candles are above the moving average, it means that the market is likely to climb higher or rise. And if the market is below the moving average, like we see here, that market is likely to decline. Is there anyone who doesn't understand what I've just explained, more especially to you guys that are new? If you don't understand, please tell me that you don't understand so that I can go back and explain. Edith, Zain, Kahiso should know. Kelebucha, I think she does. Luke is also new. Um, okay, let me see. Who else is new here? Yeah, Kelebucha is new. Pardon, yeah. Khozo also. And Inge. Or ing also does not is not a regular. So guys, please tell me if you understand what I've just said now. Okay, thank you very much, Edith. I said when you see I mean at the end of the month, we get a candle closing above the moving average, like here, this highlighted part. You see that the candle closed below the moving average, so the price is above the moving average. That means that the market is likely to pick up, that market is likely to rise. And if you see the price like here closing below the moving average at the end of the month, that market is that market or that particular stock or currency pair is likely to decline. That's what I said. If you guys want me to go back and explain again, I will try and explain again. Sorry, Edith, did you get what I've just said now? Did you get it this time? Guys, I'm waiting for Edith. She's busy typing her message to me. Well, Edith, like right now, we're just trying to get the technique. We're not really worried about how the candles looks. We're just talking about the technique. That's what I need you to understand for now. That when the price is above the moving average or the candles are above the moving average at the end of the month, that means that that market is likely to rise. And when it is below the moving average at the end of the month, it means that that market is likely to fall. I don't know what you're referring to when talking about tops and bottom bits. That part I'm not really looking at the moment. So right now, let's focus on getting to know whether the market is rising or declining. I said when the market is below the moving average at the end of the month, it means that that market is declining, and when it is above the moving average, it means that that market is rising. That's what I need you guys to catch right now. Anything else? Maybe we'll look at it maybe at a later stage. That's for people that are starting out. That's what you need to look out for. I'll have a couple of, maybe let me get another example here. I'll come back to this one now. This is braid. This is braid. You see here, this was back in 2016. We closed below our moving average at the end of the month. That was June. It was in June. Yeah, it was June. June, at the end of June, we closed below the moving average and the market started doing what? Started falling. Can you guys see this one? This is an example of a falling market when using this technique. The market closes there and starts declining. Closed there and it started declining. This is an example of a market that is falling. This is an example that you can use there for a falling market. In such a market, you need to be on a lookout for selling opportunities. Do not try and buy a market that has just closed below its moving average like this and there is no support nearby. Okay, let's look for, let me think of another name that we can use as an example here. Let us use clicks. We'll use clicks for a rising market. Okay, it's loaded finally. Thank you so much. Let me try and update it. Okay, we have clicks. Clicks, you see, let's start from 2014. It crossed above and closed above the moving average in 2014. That was in March, and the price started rising. Well, I mean, it went below the moving average briefly, but again, in Feb and in March, it confirmed 2016, and the price started doing what? Rising. So you are supposed to be buying clicks all the time you see clicks pulling back because clicks is trading above the moving average. It means that this is a rising market. Guys, are we all clear? To those that are new, are we all clear here? So in a market like this, you do not try and look for selling opportunities. You only buy this market. You cannot sell it. You can only buy it. Okay, let's look at that's a monthly. Okay, let's look at let's go back to the euro. The euro against the US dollar. That's what we are looking at now. Okay, let's go back. I want us to analyze the current picture of what is going on the euro US dollar to see what's likely to happen maybe going forward for the month of of May. Ish. Sorry guys, this is taking forever to to download this. Okay, let me see if I change it to a daily time frame. I want to see if it's gonna come up. Otherwise we'll need to change it. Otherwise we'll need to change it. Okay, Kalibcha is a question there. Let me check. Just to clarify, what period should... Oh, okay. The period on the simple moving average that you should apply the Kalibcha is 10. You must use 10 simple moving average there. You must use 10. I know we have 200, we have 50, we have all of those, but I mean, for this lesson or for this strategy, I think you should just stick to the 10 simple moving average. This one does not want to work, guys. Guys, please give me I mean, any stock that we can use to look at here. Any stock. Any stock or currency pair. Let me try something on the JSE. Okay, let me try this one, the American. Okay, I've got Anglo American. Let me change it to a monthly time frame. Monthly time frame. Okay, this is how you add your simple moving average there, Edith. This is how you add it. Please focus on this one. You right click on your screen. You come down to your indicators. You go add indicator. Click there. Simple moving average. You just tap it there and go OK. The default period is 1, so change that to 10. Change that to 10. You can just highlight, delete, and put it 10, or you can use the arrows provided on the side. And you go OK. We now have two simple moving averages, 10s. We're going to delete one. I was just doing that to show you. I think you got that one, Edith. If you didn't get it, please let me know so that I can go back and explain. Okay, Edith, guys, is saying that we should look at the US dollar Swiss franc. Sorry, Edith, did you get it? Okay. Seems like we have a problem with currency pairs, guys. Because, I mean, the previous one was the Euro US dollar, and it did not want to come up. It did not want to come up. You must always have your SMA on all your trades, Edith. All the time. All the time. It must be there. Okay, guys, it seems like we have a problem with our currency pairs here. Let me go back to the JSE. The one that I had picked earlier was AGL. I hope we're not going to have a problem with this one. My system, my trading platform is a little... Okay, it's fine. Okay, let's try and refresh it. Okay, let's make this one bigger. This was back in 2014 September. The price closed below moving average, and the price of AGL started declining. And in 2016 April, 2016 April, we closed above the moving average and the price started rising. It went briefly for like 2 months below the moving average, and it crossed above once again, and we saw the price picking up and moving higher. So we are actually supposed to be long AGL still. Let's see how AGL performed last month. This is the this is the April bar on on AGL. It went up 7.71. It went up 7.71, and month to date, or this month, we are up 1.91%. We are up 1.91%. Okay, so I don't know. Do you guys get this? That when the price is above the moving average, it means that we should buy that market. Okay, let's use the line chart. The line chart, I use the line chart to mark the turning points. Each and every turning point that you see on your chart. Let me do that using your dotted line. Let me use the dotted line. You see, the dotted line shows you each and every turning point that happened on a chart. I don't know if you guys can see that. You see the dotted lines that you see there? Sorry, the dots that you see. There's a dot here, dot here, dot here, dot here, dot here, dot here. All these dots have a meaning. They mean that that area is a turning point. So you must make sure that you mark those turning points so that when the market goes back to trade at those dotted areas, you check what the market does. If the market goes through that area, it means that that market is breaking out. If the market fails to break above that area, it means that that area where the market actually has a dotted line is actually very strong. So you can actually use that as your support. I suggested that you guys go have a look at your support and resistance later after this lesson that we are having here. So this dotted line here is our support currently. The price is trading above it. Let's try and put a horizontal line across there. I'll still explain this. If you don't get it, don't be too hard on yourself. It's going to take a while before you get it, so you mustn't really worry about it. The turning point that I'm really targeting is this turning point that we had in 2011. And you see, okay, this was back in 2011. This was back in 2011. And the turning point that we had in 2018 was in March. The price came down there to 275. It hit that area and started moving higher. The next turning point that we're going to mark is this one here. This was back in April 2012. We want to mark that area. That is our resistance there at the top. Okay, that's our resistance. We've just marked it. Right now, if you look at this market, right now the market is trading at its resistance. That resistance is around 300 bucks or 301. That's where it's at. If you look at the range that this market has traded since this dot here back in March this year, 2018, it looks like we are going to trade between 300 and 275. Looks like going to trade between 200 and 275 on AGL. If this market close above this area here, end of May, we could actually see this market going much higher. So okay, I want us now to I want us now to change the time frames. Now I want us to go back to our daily time frame. Daily time frame. That's where we are going now. Okay, the same lines that we drew on the monthly chart are still applicable here on the daily time frame. What we can do maybe here again, but we're gonna have too many turning points on the daily. That's we can only use the dotted line maybe on the monthly, not on the daily. We can only use it on the monthly, not on the daily. On the daily, we can maybe just use a plain line chart, just a line chart. Okay, this market is is on a buy if you are looking at it on a monthly time frame. Every time when you see your daily trading above this simple moving average, every time you see your daily trading above the simple moving average, it means you should go in and buy that market. Every time it crosses below the moving average or going against the signal that you get on the monthly, you don't do anything. I know that some people may say, but why don't we sell? Because it's below the moving average. No, don't sell. Wait for the market to first turn around, close above the moving average. Once you're above the moving average, then you can go in and buy. That gives you a high probability trade. It gives you a trade where you can easily make money. But I mean, if you want to go against the market and sell in a market that is rising, that's when you get to lose money. That's when you get to lose money because you don't know when that market could turn and start moving up again. So you must make sure that you do not expose yourself to some unnecessary risk or losses in the market. You must just wait for the market to go your way and then buy that market. Do you guys understand, more especially those that are new? Do you understand what I'm talking about here? Does it make sense to you? Okay. 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 So this is what I'm saying, guys. Let's go back to the monthly. I just want to say this once more. Let's go back to the monthly. Forget about the horizontal lines that we have here at the top. We're not really worried about those at the moment. We're saying when the market is below the moving average on a bigger time frame or the monthly time frame, the daily time frame should also look like this. The price on the daily time frame should also be below your moving average. When the price on the monthly is above the moving average, which means that it's a rising market, on the daily also you should buy only when the market is above the simple moving average on the daily time frame. If it is below, you don't do anything. You sit on the sidelines until you get a signal that looks positive, that agrees with the monthly time frame. There has to be an agreement between the monthly time frame and the daily time frame. If there is no agreement between the two, you wait for the agreement to first show up before you take a trade. If I mean that's what I want us to stick to for now. I know that there is support and resistance, and in my view, support and resistance actually dictate what one must do or what the trader should do in the market. But in this instance, I'm just looking at the simple moving average dictating what we do in the market. The monthly is looking positive. It's saying that it's a buy. When the market is below the moving average like this, you do nothing. You wait for the price to first close above your moving average at the end of the day. Once you see that, then you know that your chances of making money out of that trade are maximized a bit. You can actually make quite a bit of money. You may not lose. Okay, Edith is saying, please say that again about matching monthly and daily. Okay, what I'm saying here, okay, let me make this a line chart. Guys, this is a daily time. This is a daily time frame. The daily time. Okay, let's start with the monthly. I think it's better. On the monthly time frame, the red line, which is the black line, sorry, which is our price, is above the moving average. The moving average is our red line. It's above the moving average. This means people should go in and buy this market because the price is above the red line. When the black line is above the red line, it means that you should buy that market. You should go in and buy that market. And when the daily is looking like the monthly, when the daily is in agreement with the monthly, it's also above the red line, the daily time frame. It means that you should go in and buy that market. Like here, The price here was above the red line, so that means that you should go in and buy. Like right now, it's not above, it's below, so you cannot go in and buy. Back here, back here, the price was above your red line. It means that you should go in and buy that market. Here, the price was below the red line. It means that you must not go in and buy that market, because I mean the daily does not agree with the monthly time frame. They should all paint the same picture. If the monthly is above the red line and the daily is below the red line, there is a conflict there. It means that there is no agreement between the two. But I mean, when the monthly is above the red line and the daily is above the red line, that means that they are in agreement. They are saying buy. Oh, okay. Galibucha, thank you so much for attending our session. Yeah, please make sure that when you join us next time, you have your laptop ready so that you can see exactly what I'm talking about instead of just hearing my voice. Thank you so much. Okay. Edith, did you understand what I've just explained now? Zain, uh, Inge? Yeah, it is going to go it's going to go above and below. It makes sense. But I mean, when the monthly is above the when the monthly is above your red line, it means that that's a bull market. Or that market is rising. It's that market is bullish. People are buying it. But I mean, when it is below, it means that that is a falling market. The daily has to be below your red line also. They need to uh, like paint the same picture. Kagiso, this is not very hard, my brother. I promise you. It's not very hard. If the red line is below the black line, it means that it's a buy. And if the red line is above the black line, it means that that's a sell. That's what it means basically. It's very easy. Oh, what an excuse. Kagiso, you're a lady. Oh, I'm making it sound hard. Okay, let's do this. Zain, big guy, could you please try and assist me here? You saying that you understand. Could you please explain in your own words what I've just said now? Maybe the guys are gonna understand you better. Please give me your understanding. Tell me what I'm saying, and then maybe the guys are going to get it better. Luke, you can also send me maybe your own understanding also. Could you please guys type me your understanding here? I just need to see if you understand exactly what I'm saying here, so that we continue from here and make sure that the other guys get to understand also. I've made it a dotted line now, Edith. That is your moving average. I've made it dotted now so that you understand it. Exactly. That is nice, guys. I'm very happy with your answers. Zane, thank you so much for your answer. I think it was it's perfect. Um, uh, uh, Ing, I'm also happy with your answer there. Luke, I'm sorry that you have your I'm sorry that you have some issues with your connection there. But I mean, this is what it means, Edith. Do you understand? Would you like these guys maybe to try and explain this more to you, or are you happy with the answer that they've given? I'm sorry about that, guys. I don't actually know what the issue is. I will investigate maybe later after this session to see if there's anything that we can do to prevent that happening going forward. I'm very sorry about that. Oh, okay. Edith, I think there will be someone coming down to Cape Town. I think on the 5th. I can't remember exactly, but I mean, you should know that one better. There is someone coming down to Cape Town that will be teaching you all of those things when it comes to the platform or the trading platform. Because I mean, that's not what we are really teaching here. We're just teaching the basics on doing technical analysis and understanding how to choose the right side of the market. Okay. You're saying okay. Otherwise, you get the basic idea that we buy when you're above the moving average and sell when you're below the moving average. But that should be in line with the long-term time frame, the monthly. It should be in line with the monthly time frame. Okay, so that's what is happening here. I understand that we have some resistance here around 301, 300, which is what I mentioned to you guys earlier. We are not going to look at that. I just want us to look at, okay, guys, I'll give you two examples here. Let me, can you guys think of a company? Think of any company. Give it to me. Any company. I'll look at it and I'll quiz you guys on it to see if you understand this or not. I think maybe that's the way that we should do it. Oh, okay. This one is there now. Oh, okay. Edith is saying, okay. Let me start with you, Edith. It's fine. Let me start with you. SAP. Please give me your thoughts on this one. Tell me whether this is a buy or not. I'm going to start off with the monthly time frame. You must just write the buy or sell. You write the buy or sell. SAP, I'm waiting for it to come up. It's going to be coming up very soon. From there, I'm going to go to Zane. Oh, it's taking forever to come up, eh? Okay. Well, it doesn't matter. The main idea here is to get the basic, is to get the concept right. Whether you're trading CFDs or trading forex or anything, the basic principle is still the same. Yeah. This is taking forever to come up, guys. Let me try. I think we have a problem with our trading platform here. Let me try SHP. Let me try SHP. I want to see if HSP is going to come up. That's also not coming up. Oh, okay. SHP is coming up. Sorry, we'll come back to your SAP, Edith. Zain, could you please tell me what's going on here? What should one do? Say maybe sell because, or buy because, or something like that. Okay, so all of you are saying that it's a buy. Okay, I agree with you. I agree with you. It's a buy. Okay, now because it's above the SMA. Thank you so much there, Luke. Now let's go to the daily time frame. Let's see if there is an agreement between the two or not. Okay, we'll do 6 months. It's okay. I mean, on the daily time frame, what do you guys see? Is it time for us to go in and buy or not? Yeah, yeah. I understand exactly what you're saying, but the basic concept. Well, I mean, let's just focus on the basic concept for now. That we're supposed to be buying because we are above the moving average. And I understand that it's been like that for a few days, but it's above the moving average. So for that reason, we should actually consider going long. Yes, so we should actually consider going long because we are above the moving average. Let me get us one that could actually confuse us. Let me see. Let's take. Which one should I take? Oh, okay, okay, okay. I think I'll take this one. This is Braid. The code is BAT. Okay, let's look at the monthly. What should we do here? Which side should we take in this market on Braid? No, 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 no. Guys, let us not think too much. Are we below or above the moving average? Our decision is based on that. Don't try and think about anything. The signal is a sell. We are below the moving average. Let us not think. Okay, guys, thank you so much. It's a sell. Okay, now let's go to our daily time frame now to actually buy now or to actually decide. Okay, what do we do here now? It's the same stock. Now is the daily time frame. What do we do here? Yeah, guys, I think I got you here. I think I got you. We said there has to be an agreement between the monthly and the daily. The monthly is saying sell, and the daily time frame is saying buy. So what do you do here? There is no agreement between the two. They are not the same. Okay. I'll tell you what you need to do. Okay, let me finish typing your messages. It's fine. Okay, guys, you wait for the daily to be in agreement with the monthly. That's what we said. You see here, it was going up, 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 up. You went selling. When it went below here, that's when you were supposed to go in and sell. You wait for the daily to agree with the monthly. You wait for the daily to agree with the monthly. The monthly time frame is a parent and the daily time frame is a child or a kid. So you cannot take any instructions from a kid. You have to make sure that the kid and the parent are in agreement on any issue before you take the side. If the parent, if the kid is not agreeing with the parent, you don't do anything until they agree. So the daily and the monthly, they need to agree before you do anything. I don't know if that makes sense. I don't know if I make sense. So you do not go in and buy this one. You can only buy if you are an aggressive guy. If you are an aggressive trader, you can go in and buy this one. But according to the strategy that we're trying to learn here, and the strategy that we're trying to adopt, the discipline and patience that we're trying to learn here, there is no need for you to go in and trade something like this. You have to trade something that looks positive. I will think of another stock that looks positive. We'll have a look at it now. Are you guys okay with that? Do you understand? It is you looking at the wrong things. Don't look at those things. Look at the principle. That's the main thing. Don't look at all these other things like your 6 months, your 10 years. That's not important. Only look at your monthly, whether it's below or above the moving average, your daily, whether it's below or above, then you're fine. Then you're fine. Okay, now let's look at okay, let's look at SAP. Let's see how SAP looks. We'll start with the monthly. Okay, guys, what is the monthly saying on SAP? Okay, it's sell, 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 sell all the way. I agree with you guys. Okay, the daily, let's check what the daily is saying. What is the daily saying? Yes, the monthly and the daily are in agreement. They are all saying sell, but let's check if this is a reliable sell or not. It only said sell today. It only said sell today, and the market hasn't closed yet. The market hasn't closed yet, so you have to wait for this bar to complete. The bar starts at 9 in the morning, the daily bar. It starts at 9 in the morning and it closes at 5 in the afternoon when the session ends or when the JSE closes, when they run their closing auction at 5. So it's saying sell, but I mean, we cannot sell like right away. Let's wait for this bar to finish. If this bar finishes like this at the end of business, then maybe we can consider going short. Although I'm not sure whether a short is a good idea here or not, I'm really not too sure. But I mean, according to the strategy, this thing is saying short. If at the end of the day it's still looking like this, then there's a good chance that if we go in and take a short, we may make some money in this market. You must understand that there are no guarantees in the market, but they are in agreement. Let me look at another stock. Let me look at gold. I haven't looked at gold in a while. Let's just have a look at gold and see if we can see anything exciting there. Guys, please tell me, what do you see on the monthly? What is the monthly saying? It's saying buy, 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 buy. We are buying all the way. Okay, let's check what the daily is saying. What is the daily saying? Daily is on sale. So what do we do here? What do we do? What's happening here? Maybe that should be the question. What's happening here first? No, no. Look, I'm talking. Look, I'm talking in the context of the monthly and the daily setup. I'm talking about that. I just want us to focus on that. Let us not focus on reversals and all these other fancy things. I just want us to focus on the monthly and the daily setup. What is the picture that is being painted by this market right now, the gold market? What is it saying to us? Are they in agreement or not? There is a conflict there. They are not in agreement. So that means that if you are a new trader, you are not going to go in and take that trade. You are not going to go in and take that trade because the monthly is saying, the daily is saying sell, the monthly is saying buy. So until they agree, you are not going to do anything. You're going to stay out. You don't want to get involved. Besides, these guys are family, so you don't want to get involved in family feuds or family matters. You don't get involved. You wait until they agree. Once they agree, you join them. That's the only way that you are going to make money. Joining them when they agree. Okay. Let us look at the US dollar Swiss franc. I think now we'll be able to pick it up. We'll use the same strategy. Okay, US dollar Swiss franc mini. Let us look at the monthly. This is how I want you guys to analyze this market going forward. If you can hang on to this, you will get it right. Okay. What's the message that we're getting from this market? The US dollar Swiss franc. Okay, the message is clear, guys. It's buy. We are buying. We are above here on the monthly time frame. And let's check the daily. The daily is also saying buy. Yes, join the family. They're not fighting. Join them. But there are other things that we haven't looked at, like your support and resistance. Hence, I asked you guys to go have a look at your support and resistance later after the session so that you can gain a little bit of understanding. I want us to go and look at that support and resistance. When you come back, please come back with questions. Please come back with suggestions. Make sure that when you come back, you've done a little bit of research on support and resistance, because I mean that's the next step that we need to take as far as our training or learning is concerned here. I understand that this is saying buy, but I mean there is some resistance nearby. It's a buy, but I mean there is some resistance nearby. We could be a little bit late to go in for a buy. Even if you do go in for a buy, there is a good chance that around that area there that I've just marked with my dotted line there at the top, 1.00253. We could actually get a little bit of selling pressure from the bears in this market. They may want to push the price down, but for now we don't know for sure. We are just looking at that. We want us. I want us next time to check that support and resistance so that we can understand how to connect all these dots that we're getting here. I hope someone benefited from our today's session. You now understand how to look at the market and decide whether that market is a buy or not. If you want to be short term, what you can do is you can maybe look at your daily and your hourly chart. Do you guys understand? Look at your, if you want to be like short term, look at your daily time frame and your hourly time frame. They have to be they both have to be in agreement. They both have to be in agreement. Like right now, let's go check our daily. The daily on the US dollar Swiss franc is saying buy. Let's check what the hourly is saying. The hourly time frame. The hourly time frame is above. It's on a buy actually. It's on a buy. It's above. You see. Okay, let's check on the line chart. Well, the line chart is also saying buy. You can actually use that. You can actually use that as an as an entry to go in and buy if you want to trade short term. You can use your daily and your hourly time frame. If they both agree, you go in and take a long, more especially on currencies. You can do that on currencies. But I mean, if the daily and the hourly don't agree, there isn't much that you can do there. You just have to sit on your hands and watch from the sidelines. That will actually save you a lot of money. And every time you go in, you will make money because you'll be going in at the right time. Okay, I'm waiting for Edith. She is busy typing. Yes, 1 hourly and the daily. Yeah, you can use them for short-term trading if you want to do that. But I mean, I don't suggest that you do that because I mean you're starting out. I suggest that you use your monthly and your hourly for now because I mean that's where you see that's where you get to see clearly where your support and resistance levels are on those time frames, the monthly and the daily. I do not really like using the daily and the hourly. You can use maybe the daily and the hourly if you know that the monthly is also looking positive. If all three of them are in agreement, then it's fine. You can actually use the daily. But I mean, do not use the daily when it is not in agreement with the monthly. That is not right. That is not right. Edith, you're saying that you're advised to do technical analysis on the ideas. Yes, that's true. You must do your technical analysis. Make sure that you apply the same stuff that we've been doing here. Make sure that you apply it in your own trade ideas so that you get to learn and understand when those ideas do not agree with the way that you analyze the market. If they don't agree with the way that you analyze the market, don't take them. Take them if they agree with the way that you analyze that market. Yes, it is monthly and daily. Yes, the same that I've just given here. Use your monthly and your daily. See if you get a buy there. If you don't get a buy, well, I mean, it's not a problem if you decide not to buy because the idea does not agree with the way that you analyze the market. I mean, no one will have an issue with that, really. No one will have an issue with that. Okay, guys. If I mean, what we've covered so far is understandable. You're happy. Please go and do more work on this. See if you understand it. If you have more questions, please bring those with you tomorrow in our session that we'll have again. And yeah, if you guys don't have any more questions, we're going to end our session here. If you guys still have questions, I'm happy to carry on until half past. You're welcome, guys. Trading is meant to be simple, guys. It's not meant to be difficult. So we're going to try very hard to make it very simple. If you are looking for something complex, something that's way too academic, I'm afraid you won't find it here in my lessons because I want to make sure that at the end of the day, you learn how money is made in trading. It's not about being complicated. It's about doing the right stuff and doing it over and over again. Then that way you'll get to make money. You should be able to explain this even to your 10-year-old. If they follow this correctly, they should be able to make some real money in the market. I know that there's a lot more involved, like your trading psychology and all of that. I understand, but when it comes to technicals, I think this is the best way to learn your technical analysis. Guys, you're welcome. Thank you so much for taking time out to. The next one is tomorrow, 12 to and tomorrow at 12 again. It's tomorrow at 12. Okay, guys, thank you so much. Enjoy the rest of your afternoon. See you tomorrow. Bye bye.